The market just posted one of its strongest weekly rallies in years. And I bet you're wondering, have I missed the buying opportunity? Or is this just the beginning of something much bigger? Tonight we'll give you an answer that might just surprise you. And here's the kicker. We've handpicked 10 ASX stocks that look primed for explosive moves up in the next couple of months. If buys keep showing up like they have been, this could be your window to ride the next major bull leg. We'll also give you our hot stock tip for the week, and as always, answer your questions. If you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian stock market show. With over 2 decades of experience training over 30,000 traders, we bring you what actually works in the stock market. I'm Philip Tortevsky, and joining me are Wealth Within's professional traders, Janine Cox and Pedro Banales. Good evening.
Good evening.
Good evening.
How are you?
I'm great. How are you?
You excited about the reversal that we've seen on the market?
And that is exactly what we are going to start talking about today. So let's dive straight into it. There was a huge reversal on the market last week, as Janine mentioned, and I want to get your thoughts here because obviously the market was in freefall 2 weeks ago.
Yeah.
Media read everywhere out there. Trump announces that the tariffs are going to be put on pause for 90 days. We see a major jump on the market. In fact, the biggest one-day move on the S&P 500 in history. Our market also followed with a big jump.
Yep.
2 questions. What do you make of all that? And secondly, is the opportunity gone for buying?
Well, the first one, I could jump to the second one and just say who cares about the first one. But the first one is that we've got a lot of short sellers in the market at the moment, Phil. And so, of course, they're unwinding their positions and that causes a bounce at the bottom. We've also got people who are trying to bottom pick, as we call it, and they're trying to get the advantage of, early entry into the market if it is the start of a run. But that's really not a wise thing to do. History shows that the market doesn't always just reverse and then go straight up. It can sometimes have a little bit of a bounce before it does that. And we know that it's not over yet with Trump. So if it was over and they were ringing the bell and saying that it was a done deal, then perhaps, we would have a biggest rally we've ever seen. And I still think it's coming. It's just a question of is it now or not? And I'm in the camp of saying no at the moment, but I still think that people should be really have your eyes open and be watching the opportunities because there are a lot of them at the moment.
Yeah, it's interesting because, from a retail perspective, the way the market jumped, and it was on overnight's news, a lot of that buying, as you said, was speculation, bottom picking before the jump, the real safe confirmation type entry. You would have, to some degree, missed that opportunity yet. But as you said, a little fun fact, some of the biggest one-day moves on the market happen in bear markets.
There you go. Keep that in mind.
To your point, the opportunity still might be present into what's coming. Your thoughts on the situation?
Yeah, well, we saw what happened in COVID, and I think that that's still front of mind for people, and they think that it's going to do the same, which it very well could be. But I think the catalyst here for a further downturn could be the tariffs on the pharmaceuticals and semiconductors, which Trump has signaled that are coming. Now, I don't think that that's going to crash our market.
It's more about uncertainty that causes the crash.
The crash, exactly.
Is everything that could possibly come out known, or is there something that could come out of left?
Well, there isn't. And we've got the 90-day pause as well. But at the moment, we have to follow the technicals, and the technicals are pointing to the upside.
Yeah. And on those technicals, we do have 2 videos that we made last week. So go check out our channel, Wealth Within, on YouTube. You'll see a lot of technical analysis on the US stock market and also the XJO Aussie 200 market in terms of levels and where we thought the market could get to. But anyway, now it is time to pick our best 10 stocks that we have provided here for you that are potentially going to provide some good runs over the next couple of months. Because if this rally has just started, it's the perfect time to be looking now.
Yeah, definitely. And there's some stocks that actually haven't reversed as much as others. And these are the ones that we see with great opportunity and further upside. So let's get into it, right?
Sure.
Yep. So on the screen right now is a monthly chart of Reith and a weekly chart on the right. And we can see here on the monthly chart that it did witness a bit of a fall, but it has reversed and it's closing on the high for this month so far. So it has reversed, but there's still a lot of catch-up that this stock needs to do to get back to the all-time high. And it has actually come to very strong support level, which it has witnessed in the past, and that's around that $13 mark. So that in itself is a strong sign, even if we weren't going through this market turmoil at the moment.
What was the percentage fall that it's made from that top? Because I'm just looking at that and thinking that's probably a really good level. I like it too.
Yeah, you do. Great. So from that all-time high to the current level, it's 50%. So
I mean, that
we
tells
know,
you something
yeah,
straight
it
away,
does, doesn't it? Yeah, exactly. We both kind of smiled at each other when we saw that, because we know that that is a very strong sign for
Well, let's expand on that a little bit, because you both did have the same reaction at about a 50% correction. What does that typically mean for someone out there watching, going, okay, why is this important?
Look, often the selling exhausts at the retracement of that amount, and it's a bit of a phenomenon. And we talk about it in our course. It's something that's it's one of the key things to look at. So this is something that if you don't know this, you need to get on top of this and start learning some of these things that we discussed like this. But this could be the biggest level for this stock, couldn't it?
Oh,
it's
for
proven
sure.
it before. That price level just above $12 was so strong for it.
It was.
And now we're seeing it come back to the same level again. You'd have to think that there's got to be a bounce, and at least somewhere around that $20, $22 mark in the short to medium term.
Yes, definitely. I would expect that would be the next major level of resistance anyway, and that we saw in 2023. And on the weekly chart, we can actually see that it has fallen quite heavily. It's not like this stock to really fall so sharply. We did witness a few sharp falls back here in 2022, but then it was followed by a bit of a more sustainable type fall. Right now, we've just seen a huge, like a blow-off type move, and now we're seeing volume come back into it, which I really like.
But isn't this, when you look at this chart, very much like what we're seeing now in terms of the psychology of the market? Big reversal, which is what we saw. But to your point, if you look at the overriding story, it's coming off a significant fall.
Yeah.
So really, the professional, let's say, or the experienced approach would be looking at this with maybe some more caution, saying, okay, it's just 1 week. It's come off a few years of fall. 1 week.
Just rub your hands together and just prepare yourself for what could come. And then you just need the right set of rules to get into this one, because it does work on good rules.
Yeah, fantastic. All right, next
Beautiful.
one.
Next one, another big one. So Westpac. This is one of the big four, as many people would know. And it did witness a bit of a fall from this latest, shenanigans that have happened in the market. But it's still at, solid levels, and it's, let's just go to the weekly chart, because that tells a little bit more of a story. We saw it fall off on the week of the 11th of April, and then for it to reverse up, and we can see that the close is to the high of that bar of that week. So the price action, it was picked up fairly quickly at around $28. And that's no surprise, because we do have a previous level around there, around that $28. So right now it's holding up. It is pointing to the upside. We do have that gap to fill around that $35, $36, which represents about 15% upside. That's just to that level. If it does take off above that, then we're talking much more. But this will be one definitely to watch. I don't think it's quite ready for an entry, but pretty soon.
So when you're looking at these kinds of stocks, because we're looking at stocks that have the potential to go up over the next few months. And to that point, you just said, right now it's not ready. What kind of things are you looking for to confirm that move? Because there is one train of thought to say, okay, well, it looks okay now, but it could get stuck sideways.
Yes.
Are there specific price levels you're looking at to say, okay, if it gets through here, then I think that's enough momentum to take it strong over the next couple of months?
Yeah, so that price level for me, I would have to say, would be around the $32 mark. Okay. So if we do get above that, what I do like is the nature of this fall. We saw a bit of a zigzag pattern that usually represents a bit of a correction type pattern. So if we do then break above that, then that would break that pattern, and then now we're moving to the upside.
Fantastic. All right, next stock.
All right, the next one, I feel like I'm picking a number out of a barrel here.
Bingo.
Yeah, not quite. All right, now let's have a look at this.
You're still too young.
Bendigo. Don't get stuck on bingo. All right, we're looking at some horizontal lines across here, which are telling us that there's some really strong levels. I'll just move that one up. So we've obviously seen Ben hit this level, and this is obviously a second-tier bank. So second-tier banks can be really good to have in your portfolio, because eventually they will take off, and when they do, often can be quite quite strong. Now with Bendigo, I really would like to see some sort of major reversal, not just this little move up. I don't want people to get caught out, and this is where it's really important to have some, idea of where the major resistance is likely to come in, and it's in that zone really of around 11 sort of $60 and $13 where this stock could get stuck. So for me, looking at this one, it really needs to jump back above that level to have sort of any real strength behind the buying on it. And there's a big gap. It could do it quickly to try to come up and fill that gap. And there may be some shorter term opportunities. Right now, we don't have even short term rules to buy the stock, but we're just waiting to see that short term opportunity unfold. But monthly chart, if you're more looking for 12 to 18 months as an opportunity, but weekly chart if you're looking for 3 to 6 months for a trade, because it does trade up really strongly when it gets going. You might be able to trade it for a few weeks, a couple of months, and get some returns there.
Yeah.
And to me, one of the, techniques that have stood out most during the last couple of weeks, the way the market's unfolded, and we've, applied them so much in our recent shows, is a trend line. And, that trend line could have saved you or shown you where the market is heading. And I know, people can get that trend line confused. The way we applied it may look so simple, but there are rules here at Wealth Within. It's one of the techniques. And, on that point, this is the book, How to Beat the Managed Funds by 20%. It's Dale's book. It's free. You just have to pay the shipping. And if you want an introduction to techniques like the trend line that we do apply here, go and check this book out because it'll be a great introduction for that. If you want to know more and get real professional about things, then go visit the website because there are plenty of courses out there as well. Now, let's get back to it.
Yes.
Because I know there's more stocks.
Oh, yeah.
And people want to make some gains.
Yeah.
Why are you so excited today?
The market has turned. we're not in free fall anymore.
Yeah.
It's cause to celebrate.
To be honest, he gave me a drink. I didn't even know what it was. It was this yellow, like the rocker thing.
Oh, really?
And my head hasn't stopped buzzing. So.
Right. Join the club. All right. Next one is Pro Medicus. So
I feel like I'm the odd one out here. What's going on?
I should have given you the drink as well.
No, perfectly fine. The stocks are giving me the bit of an excitement here.
It is, yeah. The ones that we're showing right now are looking.
This one particularly looks good, doesn't it?
It does. So this one has been on a tear for the last basically 3 years, ever since it found that low in 2022, and even in COVID, it fell around that. How much percentage are we talking about? We're talking 63% around COVID. And then again, when we found that top at around 2023, it fell around that 47%. So right now, I'll expand it out so then we're not looking at the just individual bars. So right now, we've fallen to the degree of around 45%. So it's very much like what we saw back here during that high that we found in 2022, sorry. So we've seen a reversal now on the monthly. Of course, we haven't finished the month yet, so let's have a look at the weekly to see what's going on. And have a look at that. That outside bar is such a strong signal. And again, going back to our course, the students in Module 5 will know exactly what I'm talking about. That is engulfing the whole price action of this previous weekly bar. And we've seen price take off after that to the upside, and we're close into the high. So I think this stock is going to play catch up. I don't think anything has changed in its business. I think it's still a profitable business. So how much upside do we have? We've got around that 40% upside, and to the low we've got 20%.
Janine?
Pro Medicus, healthcare. Bit of a contention if all the healthcare stocks suffer on the downside when these new announcements come out.
Yes.
So for me, I guess this is where you and I are going to differ on this one.
Okay. Oh.
Only because I've got nothing on this move down to tell me that it's actually finished the decline. So I'd probably wait, and if I miss it, then that's so be it. But I'd rather see it come up. It might get up to about 240 and then just wait for that bounce down just to confirm that bottom is in.
So not even a short-term play?
But you're a bit more short-term.
Yeah,
so want to be a little bit more aggressive, then you might have a different strategy.
Beautiful. Covering all bases here. All right, next one.
Next one, SIQ. So Smart Group Corporation. Have you heard of this one before?
I have actually, but we haven't covered it a lot on the show.
We haven't. Yeah, this is an interesting one. So it has fallen recently. So in March, it fell quite drastically. We're talking about a 16, 15%. If you go into the close, it was only around 12. But now we are witnessing a bit of a reversal. And how much did it fall from that high there? So we've got around that 35, 37% fall. We have seen a bit of a cyclical nature to this stock. So if it does follow, we've got 2022 a low there, we've got a low in 2020 and 2022, then the low should be in according to that. Of course, we need further confirmation, but at the moment, it's one of those ones that we're just trying to show that you haven't missed out because there's still opportunities. Now, has it stopped falling? We can't confirm that, but keep an eye on it. Not yet. We can't confirm that yet. Keep an eye on it. We are seeing, previous resistance from back here in 2020, a bit of support where it's found the price action at the moment, a bit of agreement. But if it does break that $7 mark, I'd be changing my mind. If it does break above, for a more conservative play, you'd want it to break above that $8, $9, but you could even, if you see a bit of a price action that breaks above here, depending how it breaks above it, then you could justify maybe an earlier entry.
Interesting. Do you want to say something on this one?
You can tell.
Yes. No, I say.
Do I have to put my hand up?
You can't disagree with me though.
All right, not this time. But one of the things I wanted to comment on were the levels. What's really interesting here is Pedro's got a number of levels. What I find when people are learning the stock market is that they struggle to work out which levels are the ones that they need to wait for. And that's where the real skill comes in. You can draw a couple of lines, but your experience is telling you not just from the natural levels, but where these important levels are.
Yeah.
But it takes, how long would you, I know that for me, I'd probably spend at least a good 5 minutes on that, just putting things together, possibly 10, but that comes from knowing what I've got to put on the chart.
For sure.
But I know that with some students, they, that when they're first learning, they don't realise that how they've got to narrow this down to a few levels that are really key. And that's just so important to learn.
Yeah, look, you don't know what you don't know. Really, that's the beginning. When it comes to trading, there's so many things thrown at you and made to look simple, but a lot of the time there is complexity in the simplicity.
Yes, that's very wise.
Well, yeah. All right. But
You're ahead of your years.
That's through a lot of good and toil. You work that out. But as you said, once you get the experience, it's just like reading a language. That, although it may look simple in terms of what they're doing, there is, I can assure you, skill behind that. And that's where people get tripped up because they think, I'll just draw a line on the chart and think that's going to work.
Yeah, because you might look at this and think that the line that I've got here is the most important one, just above the current price action. But it actually might be slightly above that when Pedro goes and does his fine tuning. It might be a little bit higher and you might say, well, okay, I'll get in above this line only to then see the stock turn and then be thinking, well, I put the line in, well, it just turned after that. So that's where you've got to be careful.
That's also a part of knowing what you're doing, having that variance of, okay, I allow it to do these sort of things because I'm thereabouts. I know what I want to see generally. It's not black and white.
And a lot of people don't even put these lines on. They just basically, they buy an impulse. So they don't wait for it to trigger something before buying. They see something on the news, that sense of urgency, and they just say, this stock's going to be good, I'm going to buy it. But having that patience is really what pays off. Stalking it like a hawk or whatever. You have to really just have that patience, wait for it to trigger something, whatever your analysis tells you, basically. And having the training, of course, is going to help a lot.
For sure. All right, we've got more stocks.
All right, ANZ, another bank. So this one hasn't signaled again that it has stopped falling, but it has come to some very strong levels. That $26 level is a very strong support that we've seen in the past.
Just out of interest, what's the worst case scenario that you see? Because something's jumping out at me for the current fall.
Yeah, right. You're probably alluding to this pattern over here. Right? Yeah, so that is a bit of a questionable pattern in itself that could send it much lower. So if we're talking about, that $28 mark, so we could be talking another $4 down, so around that $24 mark is probably the worst case scenario. If we draw that out, $24 is probably the worst case for me. I can't see this falling much further than that.
All right, so let's keep this discussion because obviously it's a big stock, ANZ, a lot of interest. What makes you change your mind to say that it gets there? From the way price is today, what would you, if this happens next week, because at the end of the day, that's what it's all about, projecting forward.
Yeah.
Is there something specific if it closes below a level or takes out a particular level that you say, okay, now the probability is much higher, we go down? Conversely, if it goes the other way and does something, you're thinking, okay, this is the low.
Yeah, definitely. So if we go to the chart, I can highlight what I would be looking at. So if this was to do something like, and we're going to get a little bit fancy here, if this was to do something like this, get rejected, come back down, and then doesn't quite fall and then comes back up again, I'd be, very bullish on it.
So test the low, basically.
Test that low, basically. Okay. If it was to do something like that, come up, but in this case, it actually broke that low, that $26, I'd be expecting it to go down to that $24, because that's what stocks usually do. They just bounce off these levels. We could actually see something like that unfolding, and that's usually the structure that we would see on a long-term downtrend. It's not a correction as such. So if it was to bounce off this $24 level and then we start to see a bit of a retest of that 24 and then take off, then that could be the low at $24.
Okay.
But it's all about price action and how it unfolds.
Yes.
Yep.
Janine?
Oh, look, I can't say he said exactly what I was thinking. Well done. I can't argue with you.
Oh, great.
Put that one up, chalk it up.
Beautiful. I'll remember that for next time.
You can breathe now again, mate.
I can breathe.
Next stock.
All right. Next one is XRO. Now, XRO's actually broken the trend. We can see here. So I'm not going to use that fancy trend arrow that Pedro had there, because I know what will happen. It will get a mind of its own, and then I'll be going off the chart. So we're looking here and seeing the angle of the trend. It's clearly broken it. Now, the problem we've got here is often when stocks do this, and this is why trend lines are so effective, because and levels, you've got to use natural levels as well. So there was obviously some natural levels, and I won't mark them all, but there's a short-term one here that it broke, but it actually did. It gapped all the way down and finally reversed up. But it could have kept falling, because at that point, the next strongest level was all the way down here. It's not to say that it might not come back to that level. It might not have finished the fall all the way to this level, or it might still trade within that range. But what often happens is when that trend line is broken, stocks will rise to try to come up against the angle of that resistance and fail. And it could take a number of weeks or possibly months before we know whether that's broken again. But if it rises strongly back above that line, then we know that XRO is on its way. Historically, we've got some pretty serious natural support and resistance around where it's currently trading at the moment. So only time will tell.
Yeah, so it sounds like 170.
But overall, this is a stock that if it did fall lower, that's okay. But if it holds support there, then there should be some good opportunities to go back.
All right, around 170 to watch. Next stock.
Yep.
Beautiful. Next one, Hub 24. So this one's an interesting, much like Pro Medicus, this one has been on a tear again since 2022. This is an interesting unfolding right here. So it opened at $67 and it closed at $67.42. So basically on the same level. Buyers picked it up as we saw that are unfolding down to that $50 level. Buyers were picking it up and brought it right back to where it was before we saw all this happen. And we've seen huge volume as it unfolds.
Well, when you look at that bar, I mean, not just volume, yes, that is one thing that is huge, but you look at the range of that bar, the volatility, it is unlike anything this stock has experienced, and we're looking back to 2023. So how much importance as traders are you placing on the fact that this, because you take away all the news that happened over the weekend and you purely look at that price chart, that is an ultra bullish signal. Like the amount of reversal from buying is eye-opening relative to the general volatility. But when you factor in what has happened, there is a reason, I guess, for it. So how much of that are you purely focusing on just the technicals and saying, you know what, we've not seen this kind of move in a while, I'm getting excited, versus there's a reason for it and it's not over, it could change, so I'm going to stay away.
Is that a question for me?
One of you, please.
A lot in that.
So in essence, at this point in the cycle, overall we're still bullish. But things have happened, funnier things have happened, and we've got to be mindful of what happened in COVID. They talked it down a lot. They could easily turn, if something changed, if there was something that came out from left field that people weren't expecting,
which is very possible,
then we could see a bounce down again. But that wouldn't be the end of the world for this stock. I think it'd be good, if anything. But if you go back in history and we just have a look at what happened during COVID, it was more sideways back then. You know, we weren't seeing the same sort of stock. It's just a different stock now. And given that it's come back to, you know, something that's sort of more this longer term perspective, you know, it's trying to come back to that. It may not have finished. You know, if you look at the angle of what it's done historically, it could still have a bit more to bounce down between $40 and $50. But, you know, we'll just wait and see. It's done extremely well. The fact that you've picked this one and it's actually recovered so quickly in percentage terms off the bottom, that does actually indicate, it is positive.
Yeah, that's right. And you know, the fact that we've had the largest volume here since this start of this long-term uptrend in 2022, we've, you know, it's the largest volume from there. That's saying something.
It could just turn around and rip straight back up again. I mean, it's possible.
Exactly, playing catch up. And again, you know, looking at the shapes of these bars, this is such textbook, you know, ranges and shapes. Look at this outside bar here. It was signaling the change of trend, wasn't it, already? But now this one is signaling a change of trend again, but to the upside. So, you know, you'd have to apply further analysis on it, but I think this one could be a good one.
Great. Next.
All right. We've got ALX, Atlas Arterial. Now, this is a stock that's been trending down for some time. So this is really outside of what we're seeing with the tariffs. Then you've got to think about that from the point of view of, are we seeing, you know, an effect based on the tariffs, or is this just the long-term position of this stock? Because there are a few like this. I mean, Lend-Lease has been, you know, terrible in terms of its decline over the long term. This one's had a big move down. It's a nice trend. It's not something that I'd be really overly concerned about.
Yep.
But the problem with these types of trends is where you don't get a decent move back up, they can just sort of continue to drift lower. So I'd be really watching closely the last week's low. And just checking that if that holds and then it starts to move up and we see it get strongly back above sort of this, not even that, but even above this high here of 512 or 511, somewhere there.
Yeah.
If you get a nice strong close at the end of any week, it could continue to move back up again.
And see, I know why you're saying that as well, because in the past, we can see that the stock has tried to do a similar pattern as we're unfolding at the moment. So this type of pattern, if it was to break to the downside, we could have further downside to go. And that's exactly
Good
why,
point.
you know, you're saying that we need to see a break above that because we've seen it in the past. It has tried to do a bit of a continuation or a reversal, but it wasn't able to do that. So.
Actually, when I see this this bar here, now that was actually in December, and we're looking at which bar was that? It's about this bar here, isn't it, somewhere?
Yep, that down
What's
bar.
Interesting to me is you've got this high volume and no direction there. So 'cause I like to look at these sorts of things to see who's playing with it and is it driving the direction of the stock.
Right.
Because this could be that, and someone could have forced the price up by printing something, you know, or putting some information out there that people who have no idea about the stock market, don't have proper rules, they see that newsletter or the article or whatever, they buy the stock, and that just gives the brokers an opportunity to get out for a bigger client. So you're the fodder basically if you get sucked in, isn't it? So I'd just be watching for those sorts of things on a stock like this.
Yeah, agreed.
Good news. All right, next one.
All right, last one is APA. So another one that has been falling for a long time since 2022. And it's interesting because 2022 was the low for many stocks, whereas it was the high for this one. It has fallen in the range of around 47%. So again, around that 50% like we saw with Reese. No wonder it's had a strong bounce. We are up around from that low, around 23, say 25%. So I would like it to come back and retest that level before confirming. But if it does confirm and we do trigger an entry, say above that $8, then we're seeing a around 50% upside. So this is a gas infrastructure company, right? So utilities. I think that this one is going to do good moving forward.
Utilities tend to hold up, don't they, around these times? But we have seen a bit of a sell-off on all of them. So perhaps that whole utility space could be, it's being talked about quite a lot at the moment. So it could be something to watch.
Fantastic. All right. Now, if you want the skills to analyse stocks, just like you have seen tonight, visit our website, wealthwithin.com.au. Now, moving on, let's now get into our hot stock tip for the week, which is
BWP. So this is a REIT, real estate investment trust. So let's get into it. Let's go into our market index and take a look at quick fundamentals.
bit safe for you. Your temperature all right, mate?
Yeah, it is. Yeah, it's good. It's nice and liquid. It's one that definitely I'd be watching closely. Okay. And actually, it's one that I did a deep dive for the students. So if you're a student watching, I did a Trading Essentials report on this where we put a lot of analysis into it, and it was quite interesting. So if you are a student, get onto that if you're part of Trading Essentials.
Cool.
But for now, I'll do a bit of a high-level dive.
Please.
So market index, dividend yield 5.25%, which is great. PE ratio 12. You know, that can't complain with that, and I can see the nod of approval from Janine. So that's good. Market cap 2.5 billion. So it is a fairly big stock, and we don't really look at the weekly range, but it is around that mid-range. So it hasn't fallen very much. So let's get into the chart now and have a look at what's going on there in terms of price action. So I've marked these levels on the monthly chart, and we can see that it moves in these types of intervals. We've got $2.70, $3.20 as that previous level of support that it's just found support at, and then we've got the next level of resistance at around $3.80. And we've got a nice downtrend line here that we can use as our, catalyst for an entry if we wanted to. We do have a fair bit to break above it, so it depends on the risk profile and the types of rules that you use, whether it's on the weekly or the monthly. You could possibly get an entry before them, but we've got 5% before it breaks that. We've got 8% before it breaks that resistance level. So you could wait until it breaks above there. But to that all-time high, we've got 30%. You do get the dividends along the way as well. So nice lines in the sand.
I was about to ask that because, compared to some of the other stocks you typically like to look at, this is a bit of a slower plotter in terms of volatility.
Yep.
So really, if I'm trying to put the pieces together, this is probably one a bit more that goes in the income, safer type portfolio versus really looking for that strong growth.
Yeah, it wouldn't be a short to medium term play. You'd want to put this in there and just let it run. Yes, exactly. You do have to have that sometimes.
Well, look, I have to mention, Pedro is still going to be on the show going throughout the year, but he's not going to be in the studio for the next couple of months. So he's going...
going overseas. Yeah, but that's fine.
Sad.
I'll still be on a screen within a screen.
Yes.
And I can definitely chime in.
And go back to
and stay tuned to his podcast as well. I'm sure we'll have some good things coming up.
I will be doing those. And
nothing changes. It's just, you might not see his face on the desk inside every week, but he still will be here. But anyway, that is it for our weekly hot stock tip. Now, time to talk all things market trending this week. Janine?
All right, Donald Trump's tariff war and China's retaliation to Trump tariffs could mean we see a flood of cheaper products hitting our shores, and this could benefit ASX retailers and some manufacturers importing components. Now, independent economist Sol Eslake said, cars, phones, electronic products, you're rubbing your hands together, once destined for the US could be exported to Australia instead, resulting in lower prices. He said China's production of high-end electronics, cars and fashion items did not directly compete with Australian industry, and it will benefit retailers and companies that import components and manufacture goods. So not just for the consumer, but potentially for manufacturers out there who are importing components. I'd be on the phone straight away saying, what deal could we do?
Yeah, and that's the important part, because when you start talking about now, it's going to filter through to the company end, while ASX listed companies, opportunity, which will filter through over the next 6 month, yearly
Now, I was going to do Wesfarmers because, you know, I'm sure they would have been doing the deals and they're going to be bringing car parts into Wesfarmers, which when I first heard about it, I thought, hang on a minute, it's home, it's Renos, it's all sorts of stuff, but car parts, it's garden, doesn't quite
Well, they've got
fit to
pet
me.
products now, so you can fix your car, feed your pet at the same time.
Trying to be all-encompassing.
One-stop shop. I mean, Bunnings is similar like that. You go to Bunnings these days.
That is Bunnings.
Well, yeah, there you go. Yeah, you find things at Bunnings that, you know.
You've been going there a lot, haven't you?
I have. I love it.
Just for the sausages, though.
Yeah. Oh, really? Okay. You're a bit of a handyman yourself.
Yeah.
So I was going to put up Wesfarmers, but I decided to look at something else because I wanted to try to understand how CAR, as in a CAR, a car group, would be impacted by potentially cheaper cars coming in. I know that car sales has really been running strong. If we have a look at the chart, you can see that nice trend. It's been hit hard by the recent sell down, but once these sort of stocks, get a whiff of that things are on the run again, then a stock like car sales could be right up there. But at the moment, we're seeing this pullback to retest, not quite a 50% fall as we looked at before in some of the other stocks. Which may mean that could be further downside, but I just think that if this holds up and it's found support at a natural level there, I'll just open it up. If it finds support at this natural level, we could see a real takeoff. Now, one thing Pedro is probably going to tell me, what about the resistance across here? Are we going to see, car sales hit its head there? But I just think that if it does do that, eventually it's going to push through. So a move up, in the short term, there's no confirmation yet. And this is the thing that a lot of traders probably get itchy feet about, is that you off the bottom here, the upside is 30%. Often, a stock has to do 30% off the bottom before you get an entry because of these bounces, especially when it's really volatile, to get a proper entry in. So then it's about setting your position and say, well, long term, medium to long term, do I like this stock, or is it's the time frame that's important? Is it shorter term that I'm thinking? After these sort of pullbacks that happen, and we just had one back in this one here was 33, so it's probably not too dissimilar to that sort of pullback. We got a gain of about 60%. If we go into this next phase of the bull market in the second half of the year, which is what I'm expecting, then a stock like this, if we're coming off, could go up to the $50 mark. I'm predicting anyway, once it gets going. So I think car sales could be a $50 stock at the next rise. It's just a question of you then deciding, am I going to trade this short term? Am I going to pick something like this more medium term? And I would suggest, from my point of view, being a bit more conservative, I'd want to see it break through there. Unlike you, I'm not necessarily concerned about the prior high and how far it is from that prior high, because I'm just thinking that if it does go up, there's at least 16% to that high. And then if it gets to that level, I'd be saying that there's probably not much stopping it from going up further than that. So that's my first one. Then I've got an unusual one. Now, this is really for you, Pedro, because I know it's your last show. I picked something that was just currently below $1 at the moment, but it could jump back above that line at some stage. But it's a more, volatile type stock. It has come back quite a way. There was a real strong resistance level at $2.
And what do they do? Step One clothing?
Yeah.
I guess it's in the name.
It's in the name. Because we're talking about clothing, we're talking about retail.
Sure.
I thought this could be a good one to look at because it's not one we've done on the show before, and it sort of fits with what your sort of criteria.
Yeah, right.
But in the short term, we haven't got a bottom confirmed yet. We've seen this close at the top there, and I'll just expand that up for you so you can see it. But you've got the close at the top of the bar at the moment. It's come back to where it there's a short-term support and resistance around that level there before. But as I said, this $1 mark is key. It's a critical level to decide when you're going to get in. Now, I think that it will leave it enough room to bounce around off this low and move around before we get a potential entry. We may even get another peak that forms there. We could get a trend line as part of this move on the monthly. That would be nice, but you tend not to get those trend lines on the monthly chart on these smaller stocks. And we did see a big sell-off there, but you can see how the brakes are on. It's slowed right down shorter term. It's not looking like it's going to continue to fall just yet, but it's a bit early. We just need to see as I said, it'd get back above that $1 mark for a few weeks, and then we could be back on a run again. But
Yeah, huge upside.
there's a potential. Like if this thing starts taking off again from the low, obviously we've got 170% to that high. To this next point of resistance, you've got 84%. So does that get you interested?
Yeah, that should get me by for Christmas. Take out of all the Christmas presents. So yeah, I'll be happy.
So there are
Do
some
you want to comment
opportunities.
on that one at all?
Yeah, the only thing concerning me would be that that double top that it was witnessed around 2024, and I'm sure that that you've taken that into consideration as well.
Yeah. Is it far enough away for you?
But it is far enough. Yeah, that's right. It has fallen. So maybe the fall, it's had its little tantrum, and the fall could be, very much finished. But I'll be keeping a close eye on this one.
Fantastic. All right. Well, moving on, let's now jump into more stocks and answer your questions. Now, we've got a few emails today with some amazing questions, so stay tuned for all of them. But first up, we have Brijesh, who writes, what are your thoughts on DMP? It never showed upward trends after COVID. Any hopes for a recovery? I'm down 45% now. Should I hold or sell? Now, Janine, I'm going to ask you on this one because there's a few things going on. There's the fact that he's down 45%, asking the question what to do. Sounds like a little bit in no man's land at the moment.
It's a tough position to be in. And in hindsight, you can pick any level that you could have got out and think to yourself, why didn't I get out there? But this is where the stop losses are so important. So my advice to you would be to contact us and talk about getting that knowledge so that you can do this for yourself. You don't want to be out there not knowing and uncertain. And while we're here to support you as much as we can, you've really got to be the one to make that decision in the end. So weigh up the pros and cons of continuing to hold and put a floor under it. Decide, where you want to, to put that floor and stop the loss. But I think we've said on a previous show, if you were watching our show, that once the stock had gone through this sort of level, the concern is always that it could continue to fall. And you can even see that it came back up to that level twice, and it's actually refused it each time and been sold off again. So I can't give you that magic answer that you're looking for right now, because I don't know if the bottom's in is the reality of it. Until it gets back above this level here, then, it could be anything. It may be finding a bottom right now. I mean, if I go to the short-term analysis on the chart, we can see that reversal's come in, but again, there are all sorts of landmarks here. It's got to get back above this as a minimum, which is around $30. If it gets back above $30 and hold, there's hope for it, but it could just trawl along for quite a while before we see any uptick in it. We know that the cycle in the market is such that we're expecting another move up on our market, and this could get some uplift as a result of that, but how long are you going to have to wait for, and how much downside could there be? So I'd really chalk this up as a learning experience and make sure that you take a different direction going forward.
Yeah, I'd second that, because, these are the experiences, right? How many people come to us with this exact experience, and it's repeated multiple and multiple times until it's like, okay, the market is no joke. I need to take this seriously and do it professionally. Otherwise, you're going to keep going through these experiences, which, as you're probably aware, are not great.
Well, not necessarily professionally even. It's more like discipline with some rules to follow, isn't it? It's the education that's key.
It's the education first. That's the part I mean by professional. It's having a plan, going in with something.
Exactly.
That's the first part, and then having the discipline to enact it. But discipline is easy when you've got confidence in what you're doing.
And it's hard for people because they see stocks reverse and turn around after falls, and then they think it's going to happen to their stock as well.
Yeah, but then there's a lot of times that it doesn't, and you end up in that. Anyway, thank you very much for your email. Hopefully you follow Janine's advice and give the office a ring. But we do now have Jack's email. Could you please review A2M? Is this a good short or medium-term play? There appears to be a lot of gaps on the chart, which makes it difficult to tell, as I'm no expert. The next major resistance level looks to be that $10, $10.50 level. Now, Pedro, gaps, that's your thing, mate.
Yeah, well, actually, it's funny because we covered this stock a few weeks back, and somebody commented underneath that Janine mentioned the gap, and they also saw the gap, and they were screaming at the screen, there's a gap, there's a gap.
Yeah.
So there's people that know that
price could come back to fill that gap, and that would be my concern as well. We are seeing higher volume on this up move, which is a little bit comforting. But we're struggling to get above it. It's trending sideways at the moment. So until it breaks up above that, around that $9 mark, I won't be very confident to say that it's not going to come back to fill that gap. And we are seeing the close trending to the downside now, and there's a very high, probability that it could come back down to fill it before the next move. So. Yes, there are some dangers coming up at the moment. We do have that angle of the rise that we've witnessed before that it could come back down to, and then just kind of plot along there.
Part of the question was, is this a good short-term play?
No. Well, not yet, because again, we just apply what I mentioned before. Even for a short-term play, you need rules. So, and those rules haven't triggered. And short term is you still use the weekly chart for the short term. I wouldn't necessarily be promoting to go to the daily chart. So short, from up to 3 months, you still need those rules to be triggered.
Cool. All right. Thank you. Now, Nick's email is next. Could you take a look at stock code ASX? The stock is currently in a solid uptrend, well supported by a trend line. We've just seen a huge outside bar which has broken through the long-term momentum line. I am watching for a break above the last year's high and a break of the current pattern before entering a position, but I'd love to get your thoughts on the setup. All right, now this is the kind of email that, you can tell the gentleman knows what he's up to, because...
And really thought through.
Yes.
Well, which is what you're saying.
Yeah.
So look, I think it's a great stock choice, and I'm really liking what's happening. It's been really defensive as part of this sell-off, and it's recovered really quickly back up to where it was trading to, its highs. Let's just expand up that monthly chart and have a bit of a look. The first thing you see, obviously, is this low here and the reversal that happened after that, a few months up. It's really struggled to get through $70 though. So is this sort of enough momentum to get it through? And that's really the question right now, because it's not just the last sort of year that he's talking about, the high of the year. It's also the resistance is also coming from these previous levels across there. So around $70, say, could be a good point. You said the high of last year. I'd probably because I'm being a bit pedantic, I'd even go so far as to say these points here, but I'd do the rest of my price analysis to confirm whether that high is the significant one right there or whether it's slightly higher. It could be $71 or $72 that's important for the stock.
But you're not giving up
That's the
much.
point we were making before on a previous stock. Until you've actually done the full price analysis, not just put a couple of lines on the chart, then you've got to pinpoint those levels and be a bit more precise about it. Although stocks don't turn exactly on those levels, some do, but most of them they'll go through it and then come back. It's really important to narrow that field down because you could have lots of lines on the chart. But look, I'm liking it. If it takes off through that level, my goodness, we've got plenty of upside potential there. From that from this point to the all-time high is 34. There is a resistance level before that, which is around $27. It might peak out somewhere there, but still, that's plenty of opportunity.
I really like this one. Actually, you could just put a nice little trend line underneath there, and just follow that along. Just trailing stop loss.
Yeah, it's doing what you want to see around bottoms, right? Not too fast, not too slow.
Yep.
Anyway, all right. Next is Giuliano, who writes, last week, Min unfortunately broke a trend line on the monthly chart around $22. I see support around $13.50, but given Min's downtrend momentum, I believe it won't hold. Thoughts? All right. Now, it's broken through a trend line, Mineral Resources.
Uptrend line or downtrend?
An uptrend line, I believe. It's broken down
I
through
can't even
it.
see that.
Yeah, same.
Probably on a monthly chart, a big one, through around $20. And then if we zoom out that monthly chart, you might be able to see what he's talking about all the way.
He might be talking about a momentum line, perhaps. I don't.
Maybe from a long.
Yeah,
long
maybe.
Right.
And so it's broken through $20, which might have acted as support. It did for the month of March. Now he's saying $13.50. It might not hold that level. Do you see it holding 1350?
Did he say momentum line or trend line?
Trend line.
Momentum, regardless of that there.
Because if it is a trend line, yeah, it's not a valid trend line. But I think we get the idea.
You get the point. Yeah, this is the line.
Yeah.
Right, yeah. I mean, I think there's 2 points here, isn't there, really? One is the fact that he's identified that there could be a really important level it's just broken. Mm-hmm. And sometimes stocks will fall through these levels and that will be the signal to reverse back through it. But other times they might come all the way back to their all-time lows, which, is a big concern. I'll just squash up the chart so we can see where that all-time low is, way back here when it first started. So that's really the issue right now, is waiting for proper confirmation to make sure that that's the thing. But the other side of it is also knowing when a trend line is a trend line, because there was plenty of opportunities to get out, excuse me, with a trend line well before that, and it's up to you to get that line exactly where it needs to go. But with knowledge and experience you can, but you can see how that was really the point where the trend was broken back there. This is really trying to tell you where support's coming in rather than where you should have been looking for, earlier on if you were watching this stock. But maybe you sold it at the right time. But
so can 1350 hold, which is his next question?
That's anybody's guess right now, given that we don't have proper direction on this stock. And looking at the downside, there's a real strength in support here. So it could be that is the level. You could be spot on. But as I said, we won't know for some months. It's got to get back above the angle of at least that line that you mentioned, this momentum line in grey, before we'll know.
Yeah. What I like about that level is that it actually found agreeance around that level from 2017 all the way to 2020. So for 3 years, buyers and sellers were in agreeance that it was worth that much until it took off. So we could be seeing a bit of a sideways move before we take off again.
What a lot of people don't realise too is that this is just a much bigger picture pattern that's unfolded for this stock. It unfolds on every stock over time. And so people think, oh, this stock's going up, it's bullish, I've got to get on, I've got to buy it. But eventually all stocks will have this happen.
Yeah, yep, it's all part of the cycle.
Fantastic. All right, well, there you have it. Maybe not just yet, but great email. Anyway, Chris is next and writes, I had an old show of yours pop up today that I'd missed, so I found it interesting to study the charts as I was watching it. One that really stood out for me was S32. You were positive on the stock breaking out above 440, but the following week it fell through the floor. Probably something Trump said. Yeah, I think it's something to do with aluminium. But anyway, what's your new take on the stock? All right, Pedro, it was something Trump said, and it was a tariff on aluminium.
Yep.
But if I think back to that particular show, there was a level that we were looking for the stock to break above, which it never did.
Yep. $4, I believe it was.
Something like that. And so regardless of what Trump said, it still didn't trigger the ideal scenario, the confirmation in price that it was going to continue higher.
Yeah, good point.
That just exacerbated the thoughts. But anyway, today, the way it sits, is there an opportunity right now? Is your thoughts still bullish?
No. So, and this is a great example of why you apply your technical analysis tools and you apply your lines in the sand. Because that would have been around February that we said that, and we did say around that $4. So if I just square this up in a nice little rectangle move there. So at that point, we didn't have these bars here. And we did say we're seeing a bit of a sideways consolidation. And if it does break above, then we're bullish. If it breaks below, then we're bearish.
Yep.
And not only did it break below, but it broke below these previous lows as well. So, and that was very strong support level around that level there. So we're looking at $2.80. Now, it's closing around there, so it is trading around that level. It's a possibility that it could pop its head up, maybe come back to fill this gap. But again, we have to see a lot more now. It has to prove itself a lot more than it did before we can get bullish again. So, yeah, stocks do this. Sometimes it happens, and that's why you have your rules. That's why you have your analysis to be ready for it.
Yeah, but the issue now is waiting, isn't it? Because it needs to jump so many hurdles now before you can buy.
Yep. And we can have a look at the bigger picture quickly from a monthly perspective to really see what's going on. So again, it's broken.
Do you think
that
he's
previous
asking
low.
this question because he's got it? I mean, that's what's going through my mind, that he bought it early instead of waiting for the confirmation.
Could very well be. Yep. I know that there's some people like to get in before that happens. And that's part of the FOMO. You have to really get rid of that FOMO and have that patience, like what I was mentioning before, ready to pounce when the opportunity comes, not early.
Yeah, and we're showing weekly charts and weekly bars, and I'm probably just stating the obvious, but each of those moves, as price is showing that weekly bar, you can transact on each of those price levels. If the stock is liquid enough. So getting out just before the fall, getting out just near the high. You're not waiting for that whole bar to fill or finish.
Yes.
So that's a point I just wanted to make, because some people might be thinking, well, if it's already down here, how am I supposed to get out?
It's as soon as price trades below that level. Yeah.
Which is possible. Just something to keep in mind. Anyway, we do have another email. Ree writes in, so my rules triggered on Friday and I bought LYC. I have an initial and trailing stop loss on this stock and I would be interested in hearing your thoughts. Now, LYC, I can't remember who I went to on the previous one.
Doesn't matter.
Janine can cover this.
Yeah, LYC, we both like this stock.
We did,
and
yes.
This is nice, isn't it? We can do a friend's handshake now on this one.
Yeah.
So we like it, and it's just proven that it's going. The move up here was really exciting to me to see that high taken out in the short term. I'd still obviously, for additional confirmation, want to see it move up here above that point. But, I'm thinking that you're doing all the right things in terms of picking this stock. It's making all the right moves. It's going to have hurdles to jump over, yes, before it gets into completely into the clear. But it's jumped the first couple anyway with this recent rise that we've seen. While everything else was in turmoil and going down, this has held up so well. So, and the beautiful thing about it, that as these lows get higher, it just gives you an opportunity to reduce your risk and trail your stop underneath that if that suits your rules, depending on, the rules you've chosen.
Now, one thing that comes to mind is that we did have a previous resistance level around that $8. The rule, I can see what entry rule would have triggered. Now, would that have been enough upside? We've only got really 5% upside to that next level. Was that the optimal entry there, or
But how many things do you want, off the bottom? Because we had that retest. Lots of rules and reasons to enter, and it's come back here and then it's gone up again. Are you suggesting that you have a top secret rule that you're not sharing with us?
Well, you need to bring the art into it as well. That's what I'm suggesting.
I think what you're saying also is basically looking at the risk-reward scenario at that specific moment in time, whether it lined up for you. But I can also see what you're saying. The way the price is moving right now, it's so uniformly telling you, screaming at you that, hey, we've reversed, we're making higher bases. Generally speaking, we should keep going with this.
For sure.
So there's two trains of thoughts here going on, which is, again, personal preference as a trader, right?
And your back testing as well comes into it, doesn't
it? Yeah, and I'm not saying it was a wrong entry. I'm just saying that it's something to take into consideration. But the argument to that for a positive result is actually that it did do something similar back here. So there was a previous high. It tried to break it. It did get rejected a few times, and it was only after a few weeks that then it took off again. So we could be seeing something similar unfold at the moment.
That's interesting.
All right. Well, sounds like that is a good position you've got on there on LYC. So good luck with that. Anyway, Jules emailed in, I'd be interested in each of your preferences between two healthcare stocks, Ramsay and CSL. Ramsay is close to breaking a long-term downtrend and would be more of a medium to long-term play, while CSL is at the bottom of its sideways pattern and would be more of a short to medium-term play. If Ramsay closes above the long-term downtrend and CSL is able to hold the lower part of this sideways trend, which would you prefer? Now, guys, Jules is a regular on both Monday and Tuesday, so I thought for him, I'm going to make an exception. And we're going to look at both stocks side by side and we can get both of your thoughts on which one you prefer.
Perfect.
There you go, just for you, Jules, mate.
We should do this more often.
Well, this is exciting, isn't it? I could get confused and be talking about Ramsay and think I'm looking at CSL until I look at the decline on Ramsay. I know which one it is.
Chalk and cheese, isn't it?
Two big players in healthcare, obviously. Two charts that look a little different, both falling. Which one you like?
None.
Yeah, it's hard. It's slim pickings.
If you had to pick one.
Well, let's zoom out.
Yeah, which one look? Oh, well, I'll pose the question this way: which one looks like it's got the potential to reverse quicker? From that perspective, maybe one looks more exciting.
I like CSL from the perspective that it hasn't fallen below those previous lows. So if we just have a look at them from yet, exactly. You know, all of this price action here, and then we've got all of this price action here. So this one has actually fallen below that price action, whereas CSL hasn't. It is trading near the low of that, which is a little bit concerning. So it could be that, like Janine said, yet, that it hasn't fallen yet. And if it was to fall to the same degree, I've chosen the wrong tool.
I tell you, if any of them go above a trend line, then I'd look at that one first.
Yeah, all right, that's cheating. If we could put so many ifs.
Yeah.
But, you know.
It's an interesting question, isn't it?
Look, it's a fair point, because what you're talking about is waiting for confirmation. And really, that's, again, I say that word professional, but it is. You know, you do this professionally. So.
Well, it got me wondering, is he looking at is he asking this question because he's only got a certain amount of cash, and so therefore it's got to be one or the other? But I mean, if one doesn't stand out to you, mate, then maybe you better just leave them both and go for something else.
Yeah,
that's all I can say.
Yeah, fair enough. All right, well, we tried, Jules. We tried, but the team doesn't like any of those at the moment. Anyway, keep watching, because I think one of them might look quite interesting in a couple of months. We do have another email. Now, Jimmy writes in, I want to share something with you that may or may not make the show, but I feel it could help people. I am a graduate of the diploma course, but upon finishing the course have gone rogue, overconfidence, chasing unicorn stocks, allowing outside noise to affect my decision-making, emotional trading, overestimating what I could achieve in the short term and underestimating the long term. I am grateful to have gone through it because of the lessons learned, but could have been avoided by simply following the exact plan the course teaches, which I am now revisiting. If you are doing the course or thinking of doing the course, do not half measure it. Commit to 100% and use the resources that Wealth Within provides you to make you a profitable trader that you desire to be. I did not commit to 100% and now starting from the bottom again. Not a poor me story, just the truth. Hopefully this can help open people's eyes to take this seriously, because it's your livelihood and life at the end of the day. And starting from scratch sucks, but onwards and upwards. Keep up the great work, guys. All right. This is a great email, and I'm going to get both of your thoughts, because, look, I just said it before. Trading the markets is no joke. It's not play. We've dedicated our lives to it. And it's great that he's admitted, hey, this is where I've gone wrong. If I just followed an approach, and it doesn't have to be, you know, rocket science. It's simple, but it's direct, it's measured, it's proven. And a lot of the times it's the human, it's us that get in our own way.
I guess a lot of people who don't get the education, I'm going to come at that angle first, they just get so stuck on the fact that, you know, it's all about the fear. First, they get pulled from the fear and the greed side of it constantly, whereas, you know, when you get to the point where you realise, hey, I've got to stop this, knuckle down and be serious about it, then you're going to come from a point of confidence eventually, and that fear and greed and all of that the beliefs that are within you will start to come out, because that's all this really is showing. It's just showing up where you're at the moment, but that doesn't, you don't stay there. You'll move on and you'll move upwards, because you've got the right techniques and strategies and rules to help you do it.
Yeah, and recognising is the first
So well
part.
done.
Yeah, well done for you know, writing that and admitting that, because writing it is the first part of making it better. If you can measure something, then you can improve it. And I would say that this is part of your learning curve. Whenever you learn something, if you follow the curve, it goes up with your with your knowledge. But then you don't know what you don't know, and then the curve comes down again until you get, you know, kind of
experience.
As you start gaining experience, then the curve starts trading up again. So right now you might be at that base where you've had the knowledge, but you've gone through that hard experience, but now you're starting to trade up again, and the trend won't be as steep as when you first started learning, but it will be consistent. So consistency is key. Go back through the modules. Reach out if you need help. You know, we're happy to help here if you want to, you know, go over the modules again. So yeah, it's commendable that you've actually come out and told the story as well.
That's it. Good stuff. Thank you very much for being open there, Jimmy. But anyway, remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Now, if you want to watch more hot stock picks from us, check out our Time to Buy Tech Stocks Again video.